Hello everyone. In continuation to our topic budgeting, this is question number 13. Production costs of a factory for a year are as follows. Direct wages is given as 80,000. Direct materials is given as 12,000. Production overheads fixed 40,000. Production overheads variable 60,000. During the forthcoming year, it is anticipated that the average rate for direct labor remuneration will fall from rupees 0.80 per hour to 0.75 per hour. Production efficiency will be reduced by 5%. Price per unit of direct material and of other materials and services which comprise overheads will remain unchanged. And production in the coming year will increase by 33.3%. Draw a production budget. First, we will calculate the revised direct wages. Previously, it was 80,000. Now, the production will increase in the coming year by 33.3%, which means it is going to get multiplied by 4 by 3 because 4 by 3 is 1.3333, which is nothing but 33.3% increase. And then it says the wage rate is going to fall, means it becomes now 0.75, whereas the earlier rate was 0.8. Production efficiency will be reduced by 5%, which means I will multiply in the denominator 0.95. So if we calculate this, we will get 105263.16. Then comes direct materials. Earlier it was 12 lakhs, sorry, 1.2 lakhs. So that 1.2 lakhs will be increased because production is increasing by 33.3%. So I will again multiply this by 4 by 3 to get 1.6 lakhs or 1,60,000. Then production overheads fixed. Will remain as it is 40,000. Production overheads variable. Earlier it was 60,000, that will increase by 33.3%. So 60,000 into 4 by 3, it will be 80,000. So the total now will become, I need to add this 1,05,263.16 plus 1,60,000 plus 40,000 plus 80,000 to get 385,263.16. That is the solution for this question. Let us move on to the next 14th question. The following information at 50% capacity is given. Prepare a flexible budget and forecast the profit or loss at 60%, 70%, and 90% capacity. So salary is given as 50,000. Rent and taxes given as 40,000. Depreciation is given as 60,000. Administrative expenses 70,000. Variable expenses are given. Materials 2 lakhs, labor 2,50,000, others 40,000. Semi-variable expenses are given. 1 lakh repairs, indirect labor 1,50,000, others 90,000, sales 9 lakhs. Then it says it is estimated that the fixed expenses will remain constant at all capacities. Semi-variable expenses will not change between 45% and 60% capacity, but will rise by 10% between 60% and 75% capacity. A further increase of 5% when the capacity crosses by 75%. Then estimated sales is given as 11 lakhs when the capacity is 60%, 13 lakhs if the capacity is 70%, 15 lakhs when the capacity is 90%. Let us proceed with the solution. All the fixed expenses, we are writing it as it is, same thing, 50,000, 40,000, 60,000, 70,000 in all the capacities. Materials, we may notice here, this is for 50% capacity. That means this 2 lakhs divided by 50%, which means it is 4,000 per percentage. Similarly, if you look into the labor, it is 2,50,000, which means it is 5,000 per percentage. Others, 40,000 divided by 50%, so it becomes 800. Yeah, 800 per percentage. So based on that, we will calculate here 4,000 per percentage. That means here 4,000 into 60 means it becomes 2,40,000. Here it is 4,000 into 70. So 2,80,000. Here it is 4,000 into 90, 3,60,000. Labor, it is 5,000 per percentage. So here it is 5,000 into 60, 3 lakhs. Here 5,000 into 70, 3,50,000. 5,000 into 90, 4,50,000. Then others, it is 800 per percentage. So 800 into 60, 48,000. 800 into 70, 56,000. 800 into 90, 72,000. Then next is repairs. This is for 50%. And then it says semi-variable expenses will not change between 45% and 60%, which means whatever is the repair here, same thing, means 1 lakh for the 60% one. Whereas for further will rise by 10% between 60% and 75% capacity, which means for 75%, 1 lakh's 10% will grow, will increase. So 110,000. And further increase of 5%, right? So which means it will become 115,500. Then indirect labor, first 60% will remain as it is. Then there will be a 10% increase. Then there will be a further 5% increase. So that becomes 1,039. Sorry. I think I'm writing for others. Sorry. %, it is 1,50,000. Then there will be a 10% increase for the next capacity. Then there will be a further 5% increase. Others, first one, it will remain as it is. That is 90,000. Then there will be a 10% increase. So it becomes 99,000. Then further 5% increase, it becomes 103,950. Now the total will be, if you add all these expenses, we get 1148,000. The next one, 1280,000. Next one, 1494. Sorry. Second. 3,000 plus 40,000 plus 60,000 plus 70,000 plus 3,60,000 plus 4,50,000 plus 72,000 plus 115,500 173,250 plus 103,950 1494,700. So in the first one, sales is 110,000 minus the expenses 1148,000. We get negative, means it is a loss. Negative 48,000 is the profit. Next one, 20,000 profit. The next one, 5,300. So that is the solution for this particular question.